How's everybody doing? I hope everybody's having an awesome weekend. This is 50 pips, 11th of the 5th, 2014. Not making trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept. All disclosure disclaimers on the blog. So what's going on? What's going on? What's going on? Let's take a look at these charts. So we got a bit of action, at least on the Forex side towards the end of last week, thanks to Super Mario. And again, we've been talking about the fact that you don't want to get complacent. Volatility will pick up, we'll start to get moves, but just as people start to think, oh, this can only go in this direction, oh, this is not going to move, etc., etc., they get confused about velocity of move inside range. Bang, we get a move. And people who understand that know how to position themselves and move. People who don't understand that and try and get stubborn fighting flows on that ECB day when there was material change in what Draghi said, or try to fight the flows in the unwinding on Thursday, Friday into the end of the week, well, pay the price, and hopefully we'll learn for the next time, right? As we go into this week, there are a couple of interesting things. So we do have some interesting overnight news in the sessions out of Australia, New Zealand, and China, but really, the focus is going to be come Tuesday on the ZEW, right? We'll have a lot of stuff on ZEW. Then we're going to have on Wednesday, we're going to have basically Carney speaking the inflation report, which is going to be key for GPB. And, then we'll have some other stuff out of the BOJ. We'll have unemployment claims out of the U.S. We got Yellen on the wires on Friday. She loves to speak, and so on. So we do have some stuff coming out next week. It should be interesting, especially, more importantly, it'll be interesting to see how the market adapts and how we adjust following the moves into end of the week, okay? So just starting off quickly, if we're looking at the equity side, I see a lot of people talking about the fact that everything's going to roll and it's weak and everything's going to die, right? I'd still caution people against that, because if we'll trade anything, but look at YM is still pressing at all-time high or close to those highs, and we still feel that if we have a strong or a decent retracement fail, we expect that probably to have to come from higher levels, but we're going to be very focused to see what happens here. But clearly it's pressing on against resistance, and we would expect it to want to give another stab to the upside. If we look at the ES, the support zone we looked at and we've been talking about held very nicely, and we're still catching bids. So clearly there's a lot of markets having trouble breaking up to that upside, but it's still looking like it's holding a bid tone. So that's going to be, nothing changes. If you want more detail, look in the past outlooks we did, because we discussed these in a bit more detail. But again, ES is still stuck 1900, 1850, 1800, and not a lot is happening. But it's similar to Euro, right? We were stuck in very tight ranges, but don't be fooled, don't be complacent, don't fall asleep. Sooner or later we will get the moves, and usually the first strong move, you probably want to pick your stops. You don't want to get aggressive and try and fade it. But the way it's looking, it looks like if it fails, it's probably going to try and fail from a higher level. We're going to keep an eye on that. What I think is interesting, and what I'm going to be keeping a very close eye on, is the NASDAQ, right? And if you're looking at the NASDAQ, because it has been really pretty weak, it's been leading to the downside, a lot of aggressive moves, pressing, and then we talked about the fact that the bears really had to come in and smack this down into this upside resistance to keep the pressure on, right? Now we're still, broadly speaking, stuck at this pivotal level here, but keep an eye on the NASDAQ this week. What we would say is don't get confused by velocity of move inside this tight range here, okay? But if we start to see, watch for this to potentially lead, but if we start to see a breakdown and an aggressive move towards those lows, but especially the way it's looking here, higher lows, if we start to see an aggressive move back here and then we break higher, we could see a strong bid tone come back into the market across the board. So clearly I think whereas Dow and the ES are just hovering at highs there, what's going to be interesting to watch also, maybe for some clues going into the week, is going to be how the NASDAQ and maybe the Russell start to behave, okay? If we start to move over to the Forex side, just quickly, a lot of people writing to me asking me about AUD and ZD, right? Not really a favorite pair of mine. We've been talking about it since this break here, when everybody was thinking this was the Christmas gift to get long, right? And we kept on saying, you know, once we break, there's really no reason to get long here. This is a short, not only for fundamental levels, but this is looking very aggressively to the short side. Right here, just remember, we're stuck in a chop range. This is a big chop range. So don't get confused about velocity of move inside range here, unless we start to break to the upside, and that means we start to get daily closes above the 109.60s, 109.70s. This is still in a sideways chop, but it's still looking pretty heavy. It does look like it wants to take a stab back to the upside, but don't forget, it looked like it wanted to take a stab to the upside here, 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 and it didn't. So again, it looks like it might try, but don't get aggressive. I wouldn't be aggressively long if we keep on seeing failures here, because if we keep on seeing failures, then I would just expect to see some choppy action inside this range, potentially a test of the, but you know, if we break higher, then it can be constructive. Okay, now gold, not a lot's happening. You know, pretty much we're stuck around this 1300 where we see in terms of action, every time we're dipping back up into these 1310s, we're getting sold. Every time we move back into these 1290s, 1280s, we're finding a bid tone coming into the markets. It's stuck there. It's stuck around that 200-day moving average. Watch for either daily closes below those lows that keep on getting bid there, all highlighted on the chart, or daily closes above, you know, those 1330s for some. But again, it's very choppy, and most likely we need to see some kind of direction from the market before we get a bit of a move here. But again, if you want more detail on this, look at the past updates. We've discussed this in more detail again. And then what do we got? We got Aussie. Let's look at Aussie. Aussie, we're still hovering around here. We've been talking about these 93.30s being pivotal and being a Momo line. Again, I don't think it's a very interesting chart here in terms of trading opportunities, unless it's intraday. I think, you know, the more interesting opportunities are going to be in the extremes around 95.20s and at the 91.60s. But for here, it looks like it wants to try and take a stab higher. Again, 95.20 is the upside. Maybe so far we've seen protection of the 95.00. To the downside, it's going to be that 200-day moving average that's going to be coming in, acting as support in that previous bid zone. So really watch for those 93.30s, look for action around there, and that's probably going to guide us on which way we're going. It looks like it's trying to rotate higher, but heads up for potential double top there and move right back down. So it could be interesting. What else we got here? Euro, you know, the JPY pairs, Euro JPY, so it's been stuck in that range. You know, we've talked a lot about trying just to fade the range, trade the range. You know, there's a lot of opportunities here, especially on not so much here, but you know, positive close here for a move back into up range, negative closes here for a move back into down range. Now that we've broken below the range, the range play is not really valid anymore. As long as we keep on holding below this range, expect this potentially to try and make a move back down into the 139.00, and that's going to be a pivotal zone. I expect this to be globally choppy, and we'll have to see Euro to give us some guide on moves. But again, not that interesting as range plays anymore. I'd be focused on if we try and take a stab at the 39s and how we behave here, or if we move right back down inside this chop range and we start moving sideways again. In terms of, hold on, I did something I wasn't supposed to do. And then we've got in terms of USD JPY, which is an interesting chart, right? If you look at a weekly, we're right back into that support, and it looks like it's trying to base to take another stab higher, and that's really what it's all about. It's all about that support, okay? And if you're looking at it in terms of you know, 4-hour chart, you can see that, you know, it's trying to go back into that base support that caught a bid so many times in the past, right? Let's see if we can make this smaller. You see this much better chart to look at it. You see this. So basically this has been really kind of money zone, money line, very tight longs every time we moved into this. Everybody think it was going to break. Very nice, very interesting risk reward for all these longs, right? Unfortunately, on this move here, didn't get a chance to trigger any longs as we did a move back into the zone. It is holding. But again, look at these 101.80s here to be pivotal. If we start to get daily closes above here, then I would expect us to potentially try and make a stab, take a stab all the way back back up into those 102s, 103s. And keep in mind here that we do have the we are going to have the BOJ on the wires this week. We're going to have crude on the wires, so potential big event risk there. And keep in mind that if we start closing back below here, well then, you know, we'll have a possibility of a move right back down into those lows. So the pivotal level remains the same. It's all about support, possibly interesting opportunities. Let's keep an eye on this and see how that behaves. What else we got here? So we've got Kiwi. Let's look at Kiwi. So again, Kiwi getting sold at the 87.40s, and we're moving back down, and we're in a pivotal range here around these 86.40s. So the way we're looking at this is hold below these 86.40s. There's a potential for a move back down into that support zone, which is basically the 85s, right? And that's going to be interesting because it looks like you see those two moving averages, the 100 and the 200, are going to come into their supporting. Again, don't forget we've got the RBNZ on the wires this week. So that's really what we're looking at in terms of at least first base support there. We've got that resistance that's still intact, and it's here in a pivotal level. But again, I think there's a lot of event risk. It's better to see some more what else comes out of the RBNZ. But right here, those are the pivotal levels into that support. I don't think it's very, very interesting chart personally to trade, but I would prefer to see more extreme levels, but that's what we're looking at. And then last but not least, let's look at Euro and cable. So what's going on cable? So cable, we highlighted this in the past outlooks, right? We had this pure reversal candle, you know, pretty, you know, we tend to call these gift from the gods, very, very tight stops on those, right? Also protection of the 170, and we got a pure roll all the way back down into this base support, right? So now what's going on into the week? Keep an eye on these 68.50s, right? If we hold below these 68.50s, then we'd expect to see more pressure on. Again, do not forget it's all pretty much and only about the inflation report and Carney speaking this week, right? But as long as we hold there, you know, keep an eye on this. Oh, I don't know why this is playing up. I'm trying to get this. Let's see if we can move it. Oh, there we go. So, you know, especially if we start to get, depending on what we get out on the wires from the BOE, but as long as we're holding below these 68.50s, look at the market to probably trade with a heavy tone, trying to take a stab back down into this pivotal level. And that's pretty much the 68.00, right? And as long as we hold there, we should be fine. But if we start to take that out, then we would expect to see pretty strong acceleration all the way back into the 67.60s, right? Globally speaking, this could easily still catch a strong bid tone. Don't be fooled. It's moving into base support, but maybe, you know, it'll probably be more towards mid of the week, later on the week. Now, if we start to move back above the 68.50 and we're holding a bid tone above there, then we would not be surprised to see this take a stab right back into that pivotal level again, right? The levels are the same. We'll have to see as Carney and the inflation report starts to confirm what the market is waiting for, but clearly those are the key levels. Should we see, you know, in terms of broader range, should we see very aggressive selling? Again, the base support we have for this week and we'll be focused on are the 66.50s, okay? So that's what we'll be looking at, very strong level. But right here, we're a bit shopping around. It's nothing more than a healthy retracement for now. Let's see how the market comes into it on Monday trade, right? And then last but not least, again, we've got Euro. So Euro, we talked about this level, you know, we've had this chart up for a while, and we talked, it was all about that move. You know, as we're stuck inside these ranges, we had a couple of levels, right? And the levels we had was the 39.65, 66, those yearly highs up to there. We had the 39s, we had the 37.70s, and we had the 36.60s, right? And as we were hovering here, see, we'd made lower highs and we'd made higher lows, right? So it was consolidating here. It was very choppy, but we said, you know, into these kind of meetings, etc., what we would expect is we would expect for the market to continue in the path of least resistance. We would expect to market to try and take a stab and a shot to break the upside, and then on that ECB we would see decision time. Either we get Momo or we fail, and then it's time to get a bit of a healthy retracement, right? And that's pretty much what happened. You know, we tried to take some stops to the downside. We couldn't get any traction. Bam. We cleared the upside, and what happened? Pure protection of these 140s. As Draghi said, you know, be comfortable. Cutting rates, you know, when you hear that, pretty much it's a sell. And basically, bam, we saw this aggressive move down, very aggressive daily close, especially on that material news. Very rare to see this catch a bid, as any kind of bounce, trapped longs will be getting out, puking out their positions, and it's very normal to see follow through like that, right? So bam, we're right here and we're holding the 177.70. So it's not the end of the world yet. You know, I would caution everybody between people talking about the end of the world. Clearly, is this heavy for euro? For sure it's heavy, right? It's a very nice short move. It's heavy. Going into the week, keep an eye, 37.70s. Hold below, daily close below. We would expect this to slowly try to accelerate back into the 36.66s. Globally speaking, we're still in this range. Catches a bit above, we could easily see a move right back up into the 139s. Now, let's see how this trades at the beginning of the week. It would be healthy to see a little bounce here. What's going to be interesting to see is as we go into the week, and again, as we go into ZEW, right? If we get that healthy bounce, you know, our seller's going to come back in and smack that down, and then back below 37.70s, we would expect to see this try to accelerate into the 136.60s. If we get the little bounce, we get the ZEW that's supporting, it catches a bit again, do not be surprised to see this trading back into 139s before, you know, you can blink, right? So clearly the message is we've had a potential strong failure at highs. We've moved back down. It would be healthy to see a little bit of a retracement. The key to the upside, the key will be to see how the market reacts if we get that kind of retracement, but especially how the market reacts into ZEW. And finally, don't forget, we're pretty much still inside that chop range with those 4 levels we've been talking about for a while, okay? So I hope everybody has an awesome rest of the weekend wherever you may be, whatever you may be doing. If you like the content, don't be shy about sharing it, retweeting it, liking it, whatever. And again, I'll see you guys for London Open. Thanks for listening. Have an awesome one. Thanks again, guys. See you later.